Hello guys, Alice here, welcome. In this particular episode about trading, I'm going to show you the results of my trades on gold on the 30th of January and also walk you through the step-by-step process, why I took this trades and how did I take this trade. So I know you can't wait to see it, then let's dive in. So guys, this is the 5-minute chart of the gold you are witnessing. To begin with, I had the bullish bias in my mind because I saw that the market was making new highs, like to be specific, making a higher highs and also higher lows. So it confirmed my bullish bias. Before I proceed, I have to mention I only took 2 trades today. The first one was a long trade, the second one was a short trade. Each of them yielded around 140 pips, total of 280 pips, which was fantastic, phenomenal. I'm going to show you the results at the end, by the way, the total profit that I made. Anyway, take a look at this one. Market went all the way up here and moved back to this point. It could not go to this level. It was a support level which market could not get through it. And once I saw this rejection happening here, let me zoom in on the footprint chart so you could see clearly. This is a sign of a rejection, basically. Market taps into a level, okay, in this case it's a support level. You see too many aggressive selling at this level, but they fail. Why is that? Because you see the candle closes up. It closes above this level. It closes even above the POC. It is almost about to go out of the value area of that candle. So too many passive buyers here. And you can see market gradually moves up. So I didn't enter here because it was pretty close to the VWAP line, and I do not like to take that kind of a trade. If you're a scalper, that is pretty much good. Okay, that is solid to do. But I didn't take that trade. Once the candle closed above the VWAP line, okay, I did not even take a trade, okay, because the market was already inside a selling area here. Take a look at this side here. We have POCs almost, they're not in the one line, but they're almost in alignment. Okay, that's kind of a resistance level to me. Okay, I did not take my trade there. I waited a little bit longer. Market again went below the VWAP, but again I moved back above the VWAP line again. I did not take my trades again, so I waited a little bit longer. Market moved back below the VWAP line. Okay, I did not take my trade, although in this particular instance you can see that the majority of the volume is around this location. Okay, it could not go through this huge area of the volume. It moved back up again. So once the market here closed above the VWAP line at this point, I knew it's gonna continue to go up. So I took my long trade at the opening of this candle. I put my stop loss, okay, all the way here. Let me show you guys. I entered here. I put my stop loss all the way below this rejection point, and market moved all the way up here to 2047 on the spot forex market. So I went from 2034 to 2047 on the spot market. So why I took that candle into my interest. So that this particular candle here shows that a POC is below, and yet the candle closes above, and the next candle does confirm it. Okay, the delta is negative, but yet the candle closes bullish. Okay, on the next candle the delta is positive. Okay, but it did not tell me that it's going to continue higher, and this candle is bearish, so it's not technically telling anything, but it fails to basically go below this area or this level of a support, and this candle closes bullish, extremely bullish. Look at the delta, 274. Okay, that's too much of a delta. Okay, I knew that this is gonna be some sort of a movement here happening, so I went long at the opening of this candle. I put the stop loss, as I told you, at down there. You can see the market moved all the way up here, all the way up here. But take a look at this candle. Delta is negative 73, and yet the candle closes bullish. Why that happened? We had aggressive sellings, but they could not keep up with the demand. The demand is way too higher than the aggressive selling. Okay, that's why the candle closed bullish. The next thing, delta is 110 negative, and yet the candle closes bullish. Why? Demand is way too much than the aggressive selling. Okay, and the next candle, delta 270, fantastic. Okay, next candle, delta is reduced a little bit, but is still okay. We have signs of bullishness into the market. And again, next candle, take a look at this one. It's quite interesting. We have negative 205, but yet the candle closes bullish. What sort of a sign is that? Okay, we have demand in the market still left. Okay, there are too many aggressive selling happening, but they cannot keep up with the demand. Okay, market continues higher. Next time the market continues higher. Okay, until the market reaches this point. Take a look at this one. Fails to close above the POC. It almost closed below the value area. And for the next couple of candles, you can see market it went into a state of a resting. Okay, it consolidates a little bit, and then boom, goes down. So that was my first. So I went long at this point. I exited here. My second trade was a short trade, which I took around this location and went all the way down. So how did I do that? Take a look at this one. So once the market reached this level, I looked up something on the cumulative delta. Look at it. What sort of a divergence is this? Market is making a new high, but the cumulative delta, it's not. Cumulative delta is going down, but the market is going up. It's a divergence. But what sort of a divergence is that? Is a bearish divergence, right? And what happens at the end, you can see the market goes down. So the first thing I had was the bearish divergence, but I needed an entry point, entry level. Bearish divergence gave me a perspective, an idea that the market is going to go down, but I needed an entry point to get into the market or basically calculate my risk to reward ratio. So where did I took my trade then? So look at this candle here. It is 421 positive delta, and yet the candle closes bearish. Why is that? We had too much aggressive buyers at that point, at that candle, but it failed to close bullish. Despite too many buyers, it failed to close bullish. We had passive selling happening there, right? So what I did was this. I went short at the opening of this candle. I put the stop loss 50 pips above this entry point, and you can see that the market went all the way down here. So why the market dropped so aggressively? It was due to the result of the news being released for the dollar, which was in favor of the dollar, by the way, and you can see the market went down so aggressively. So I went short at the opening of this candle, 50 pips above the entry point was my stop loss, and you can see the market went all the way down. Take a look at this candle here. So the candle closes bearish, right? And is at the POC level. Yet the delta is pretty much positive. Why is that? Because we had too many aggressive buyers. Okay, the net aggressive buying was more than net aggressive selling. Okay, but the net aggressive buyers could not exceed the passive limit orders were placed there. We had too many passive selling, which these buyers, aggressive buyer, could not get through them, and that's why the candle closed bearish. And again, on this particular candle, delta is negative 521. Nobody dares to go long there. Okay, it doesn't make sense. And we also have broken to the VWAP line. There may be a pullback to the VWAP. You can see a pullback happened on this candle, and the market continued to move down. Okay, negative 14. Okay, but the volume is still so substantial. We don't go long there. We do not think of a long anymore. And next candle opens up here, and there you go. At this point, this was the point which I exited my trade because it hit the POC of the day, and I didn't want to stay inside that trade anymore. I exited the trade. You can see went down for one candle, and then we went to a second consolidation, and you can see the market is now moving back up and it's been consolidating ever since. So let me recap why I took this short trade. The first thing was a divergence on cumulative delta. I also had this level being monitored as my static resistance level. Once I saw the discrepancy on the footprint chart, I went short, and I managed to keep my trade open till this level. And the first trade I took was this one. Market was above the VWAP line. The state of the market was bullish. I was only looking for an entry on the long, which I took, and then I took my trade. That's all. And here are the results of trades I took today, guys. The first one was a long trade, which I mentioned on the footprint chart. I went long. That first entry was 2034.39. The second entry was 2036.41, and I closed both trades at 2044.45. Total profit was more than $900. And the second trade I took was a short trade, as I mentioned, and the total profit was more than $2,000 on that particular one as well. So that's it, guys. As you can see, the result is phenomenal and fantastic and enjoyable as well. So I'm gonna make more videos like this explaining why I take my trades and how I take them, because I believe that it has a great impression and influence on your trading. But make sure you do not lose any videos of such a kind, and stay tuned for more episodes like this. I hope you do well and be profitable. Till next video, goodbye.